I'm Matt Bishar with Nareit, here in Hollywood, Florida for Nareit's REITwise, the 2018 Law, Accounting, and Finance Conference. Joining me today is Ron Bohlert, lead of the real estate sector with the NYSE. Ron, thanks so much for joining us.
Thank you, Matt. Great to be here.
Now, can you start by talking a little bit about REIT IPO activity that we saw in 2017 and how it's shaping up so far in 2018, and how are REITs compared to other industries in that regard?
I think to frame out the IPO activity, it's first important to look at what the overall market was doing, because that lends itself a lot to what the IPO activity looks like. Looking back at 2017, overall equity markets had a great year. Continuation of the rally that we've seen over the last several years. And if you look at the S&P, we had the best year since 2013 with almost 20% gains overall, as we've had resurgent economic growth, strong corporate profits, and the proposed tax reform plan all propelling this rally upward. As a result, we had very low volatility also, with the VIX trading between 13 and 18 throughout the whole year. Now, the combination of these conditions was great for the IPO activity. Overall, we had 88 IPOs raising $31.3 billion, and that's across all industries. Now, the REIT space, while relatively flat throughout the course of the year, we still saw 9 IPOs raising about $2.8 billion. So about 10% of the totals were still from the REIT space. Now, to kick off 2018, the market rally accelerated the first few weeks of this year, reaching all new all-time highs by the end of January. And with regards to IPOs, again, we saw 11 new listings raising $8.5 billion, which for the New York Stock Exchange, if you look back in our 225-year history, that was our best January ever. And REITs played a big part in that also, with Americold Realty Trust and Vici Properties both being a big part of that $8.5 billion of capital raised.
Now, more broadly, the market was, like you mentioned, soaring in January, but then things turned and stocks gave back a large chunk of their gains. In many ways, volatility has really been the theme this year. Why do you think that is?
The last couple of months have been interesting for the markets, without a doubt. So January 26th, we hit new all-time highs. And then over the ensuing 9 trading sessions, we shed 11.1% of the overall value, if you're looking at the S&P, putting us into correction territory, which is widely defined as a 10% or greater move off the highs. Quite a few reasons are being looked at as catalysts for this downturn and then ensuing volatility. One thing to look at, it's been over 2 years since the last market correction. On average, we see at least one of those 10% moves downward each year. So we're a little bit overdue on that front. And then if you look at some of the data that came out, in early February, we had a jobs report, which showed 200,000 jobs being added, wage growth at 2.9%. Overall, very positive report, looked great. But it's important to remember that the economy and the stock market are two very different things. So while it was a great report, from a trader's point of view and from an investor's point of view, we had some now inflationary concerns looking ahead. And with the Fed's policy looking forward, now are they going to do 3 or 4 hikes versus maybe 2 or 3 on the rate side of things? So this led to a little bit of selling pressure. You add on some of the political risk. A lot of decisions, a lot of news is coming out of Washington with regards to tariffs and then possibly trade wars also, and all these other buzzwords that are circling around. And then the last layer, from a trading perspective at least, you have a lot of technical levels that are being used as trading mechanisms back and forth. So you add all this together, we've had an incredibly volatile February, to say the least. And as a result, the IPO activity has suffered a little bit. With the increased volatility, there's less assurance of getting your pricing correct on where you want it. So we've seen a definite slowdown in the IPO activity as a result of the incredible swings we've seen over the last couple of weeks.
And more specifically, how does that translate to the REIT sector and what's been driving those shares?
We spoke about the overall markets having a great year in 2017. While widely speaking, the REITs have not really had that same type of a rally. Very similar into this year. While they participated in the downward turn in February, they really haven't bounced the way the rest of the market has. And there's a couple of overarching themes that we've been hearing over and over. A big part of it is the recent tax reform that the overall market has had incredible optimism about. It's generally that optimism isn't being shared by the REITs so much, in that they might not be seeing the same direct benefits as some of the other sectors. And then, the obvious one is the interest rate environment. We're pushing the 3% mark on the 10-year right now. Later this afternoon, the Fed's speaking again with all thoughts pointing towards another, maybe 0.25%, and then plus multiple hikes throughout the course of the year where we could see the 10-year at 3.5% to 4%. So, looking ahead, this should be some continued pressure, I think, on the REIT space.
And lastly, the NYSE and Nareit are going to be hosting the second annual REIT IR Symposium at the NYSE Big Board Club coming up in June. What can attendees expect at this year's event?
So we're definitely looking forward to partnering with Nareit again. Last year's event, it was our first ever attempt at something like this. We had about 120 participants from both the CFO and IRO level joining us for a day of networking, panel discussions, sharing best practices, and focusing on themes unique to the REIT space. This year promises to be more of the same. And while we're still working on the agenda and some of the final details, so I don't want to spill it all yet, we're definitely looking forward to another great day for the REIT community, and we're looking forward to working with Nareit again on this.
Ron, thank you so much for joining us.
Thank you, Matt.
For more from REITwise, be sure to visit Nareit's website, REIT.com.